Hi everyone, and welcome back to another Brooks Price Action Weekend Market Update. My name's Tim Fairweather, and today we're going to look at the FTSE 100. So let's check it out. Because it's the start of a new month, I'm going to take a look at the monthly chart and the weekly chart, but I'm going to also start with what we thought would happen last week for a little bit of accountability and continuity with our reading of price action. The point is not to develop psychic powers, but to get a reasonable expectation of probability and then be able to react to it in the right way. You can see here, I've got the UKX, the futures ticker, and I've got the monthly chart, and I've got some moving averages on here, a 20, a 50, a 100, and a 200. These are moving averages that I think longer term investors use, and so I pay attention to them. We usually look at the 20 and the 200, but it's interesting to know that the 20 bar moving average is actually below this breakout point if you're using the tails, but it's actually right at this breakout point if you're using the bodies. This was also the prior all-time high. So there's a possibility we could come back and test just below 8,000. It's also a big round number. And with 1 week to go to the US election, will that be the target for next week? Full disclosure, I've made money trading FTSE only in the long direction the last couple of months. So I'm certainly hesitant to switch to short just yet, but I think we're going back to the moving average at some point. That's looking at the EMAs. So this is where we were last week, and I just want to take a look at this before we jump into this week. We said inside bar, double top, tight trading range at the moving average. And what we said is this is an inside bar and it's at the moving average. It's not a high probability entry to do anything. Usually traders wait for confirmation. So if this is a bear bar, they're waiting for a follow through to look at direction. Other traders like myself wait for a breakout of an inside bar and then a test back. It was not a high probability buy down here, nor was it a high probability sell. So that's where we started last week. Now you can see what happened last week. We had a bear bar, we had a trigger below the low of that bar, and we've closed below the lows of a lot of bars in this tight trading range. I said last week that I was not willing to be a seller at these lows considering everyone was buying. And it was interesting that the market respected that price again. However, now you have a good looking bear bar with follow through. So I'm wondering whether there will be more bears sitting back at the moving average. It's still within a tight trading range. Last week, we said there was a double top. The bears see now 3 different sets of tops. We had 1 leg down, 2 leg down, maybe this is 3. It's probably a micro wedge top in here, but I don't spend too much time counting within a tight trading range. I prefer to wait for a breakout and follow through to look at the next direction. Trend lines are not static. So I had this blue trend line going through the chart last week. I've added some additional trend lines this week. As channels go on, they weaken. And I think the angle of this trend line is now more starting to match the moving average. When we raced up here earlier, we created a lot of distance to the 200 moving average. And now we've been starting to go sideways to down. So there's an argument for some kind of counter trend wedge to get down there. Now, I'm not suggesting that's going to happen in the short term. This is incredibly bullish and it's still got open breakout gaps. So this wedge is more likely to do something like this. So the surprise trade from the bears would be a strong follow through bar next week, which would hit around about the 8,000 level. 8,000 is 170 points away. So the question is, are you willing to sell the close of that bear bar? It's a bear bar with a tail above and below, small body closing right in the middle. This bar itself is a tight trading range within a larger trading range. For me, if I'm trading in a trading range, I'm looking to buy below bull bars. You can see traders buying below bull bars. You can also see traders selling above bear bars. So my first short needs to be somewhere up here, so I might not get a chance to sell if it takes off on this chart. But I'm not super excited to buy below that bear bar because the next obvious support layer is all the way down there. It's not such a high probability trade that I want to fade into it. I think I'd prefer to wait for the breakout and trade the second leg. So 2 good closes from the bears on the weekly chart. Is it always in long, always in short? When a chart looks like this, I'd say it's in a tight trading range. One other thing I'd like to point out is that there was a high, what I call the highest high one on the monthly chart. So if you take the highest bull bar that triggered above it on the monthly chart. Those traders were triggered in there, but the market did not come back to let them out. The market did form 3 pushes up to it. So I think those traders got out. If I was long here in a tight trading range, I'm looking to buy below a bull bar. I'm looking to buy the moving average to get out of that trade. I was hoping for a breakout. That's failed. I've got more of a position to scale in. I think it's more likely for next week that the same thing's going to happen to the bears. The breakout is going to try and succeed and come back and test the moving average. We've got the election next week, so I think that's possible. Here I've got the FTSE 100 on the monthly chart. Now, sorry if my little window is blocking it. That's 2 ES for second entry short. So you can see we've clearly had a 3 push pattern here. We've run a trend line across the top. It's a wedge. We broke out of that COVID spike down. It sets a spike measured move up. But you can see the price action at the moment is just not that aggressively bullish. This was a big change from the bulls, which had a high probability of a second leg up. We've actually got the high one there, but not a lot of traders looked to buy that high one. So it makes me think it's more likely to have a successful high 2 or high 3, which is back at this breakout point. The other way to look at it is if this is 3 legs up on the monthly chart, bears should have a couple of legs sideways to down, and we might have already started it. The bears triggered below 1 bear bar here, the bears triggered below this bear bar here. And this is quite interesting because if you look up here, if I'm a bull and I bought up here, this bar let out traders that bought the close. So if I bought the close of that high one, I'm disappointed with the pullback on the following month. It's then a bear inside bar. I don't really want to buy above that. So if no new bulls are going to buy above that bar, I'm going to exit at my entry and look to buy lower. We've got consecutive bear bars here. We're closing at the moving average, which makes sense in a bull channel. I don't think it's a great sell below, and I don't think it's a great sell to close, but I do think we're just going to drift sideways to down next week into the election to decide what the next move is. So I'm not willing to sell here, and I don't have a buy signal. So at least on this chart, I'm flat. You'll also notice I've got a couple of targets. I've got an 00 target out up here, and I've got an 00 target down here because of these consecutive outside bars. We actually had inside, outside, outside. So it's breakout mode here, 50-50 chance to go in either direction. But one of the reasons that I think traders avoid breakout mode is it's 50-50 on the probability, but you don't often get 2 to 1. So you're basically taking a trade where the maths isn't great. Better to wait for a better setup. If this is going to be a bull bar at the moving average, one problem the bulls will have is that it's likely to be an inside bar. So they might choose to wait for another leg down to buy, testing prior all-time high and the breakout point. So that was the weekend market update for the FTSE 100. I hope you found that valuable. So we've got the election next week. So probably just drifting sideways to down into magnets. The price action last week was a little bit climactic, but there were moves on the intraday charts that you could trade. But on the higher time frame, I think it looks like sideways to down into the election. Well, thanks very much for watching. I hope you found that valuable. My name's Tim Fairweather from Zen Trading Tech.